All right, here is December 21st. It's Thursday of the week. There was a lot of volatility yesterday. So I knew there was gonna be a lot of volatility today. So here's the thing: you have to. I didn't play as well that I should have. I was distracted with a lot of other things, and that's the reason why you sort of have to be on point at all times and constantly be um, uh, readjusting your thesis. It's gonna change throughout the day, every 30 minutes. But once you can sort of realize what's going on, then it gives you a little more confidence. Not necessarily with sizing, but just holding for a bigger picture. So I'll just go through today of all the different elements of the technical analysis. It was pure technical analysis today, and I'll show you why and how you use the pivots and how you just have to trust them. Like, I don't know what else to say. Like, watch this video over and over and over, and the hardest thing for me on trading is just the perfectionism that I have in me. Trying to have perfect entries or perfect this or perfect that. It's really difficult to have perfect entries. Very, very difficult, unless it's at certain times and there's certain scenarios that play out. But other than that, throughout the day, you're gonna have a lot of movement around different levels. So let's go into the chart and I'll show you. So you can see the first 30 minutes right here. These are 5-minute candles with 30-minute overlays. So 5, 10, 15, 20, 25, 30. You can see that we started up here. This is the multi-day pivot. So if you look over here on the left, here's a multi-day bull pivot, and then here's the previous week's close. That is right down there. And so when you look at this, we open I believe down here, and then we shot up, and I went short. You just short it. I mean, it's there is no level when it comes to, like, say, intraday that's up here, but it's important. It's a multi-day pivot, especially when the volatility. You want to be playing mainly with the multi-day pivots. They're going to give you the best idea for the range for the day. Now, intraday, anything can happen, and I'll show you. So here you can see that it basically then dropped, and then 30 points up, 30 points down, 30 points up, 30 points down. There was just a lot of range that first 30 minutes. But the key that you could tell on the direction was this. You see how at the end of that 30 minutes, that's that last 5-minute candle, you see how it basically closed below? I mean, that gives you an indication that it's weak, and your target should be the next level, which is down here. So let's see. So what ends up happening is, you can see, let's zoom in, that there's a wick right here. So it does come up and then comes back down. So if you would have got in right here, you would have got stopped out, and then it reversed. So that's why you have to be nimble, and you have to play with little size for the bigger picture. I mean, yes, it's nice to play with 2, 3, 4, 5 contracts, but I mean, look right here. If you would have got stopped out, you would have missed. It would have came down, and then it just kept on going and going and going. But I ended up getting in right here, and I risked to back above this 5-minute candle because it's the close. So if it came back above, then this would have been a failed breakout or breakdown, and then this potentially, if this candle closed at 5-minute, then that would have been a failed breakdown, and then this probably would have reversed, and we would have probably came all the way up to the +1 ATR. Because then there you can see that these wicks, they're holding this mid. But the moment that it closed below, you need to assume that the trend is to the downside. So the problem that I had today was I didn't have these fids up, and so I just was trying to play for the bigger picture. Sometimes you get it, sometimes you don't. Sometimes you get a fast move, 100-point move in 10, 15 minutes. Sometimes you get it, might take a lot longer. and you'll see in this chart how it played out. But I should have took profit right here and then just been happy. I had 5 contracts that would have been like $3,000 or $4,000 and be done. And then, but the mere fact that it came down and then the next 5-minute candle, it retraced. This is a big indication that there's something going on, and you need to be really careful, because what ended up happening is you can see that it came back up, broke back above, but where did it go? It went back to the top where these candles were closing, right? And then it reversed again. So in essence, I'm going to delete these. On a technical analysis, see, this looks like there's no method. There's no, what's the word? There's no idea what's going on. There is. I mean, look, it's a consolidation pattern. It just didn't show you the consolidation pattern until later on after an hour. So bigger the consolidation pattern is usually bigger the move. So here you can see now, hindsight, that we had to make new highs here. If we did not make new highs, then this is a lower high and then a higher low. That's what you always want to be looking for throughout the day, is consolidation patterns. So now, now that the day has materialized, you can see that there actually is one. So then once you start getting to the crux, you'll know that eventually there's going to be some direction. And so you never know. I think, Regime, if you're watching this, Scott, remember I think I told you that a lot of times that first 2 hours, from 8:30 to 10:30, you might have some stupidity and chop, or no direction, right? Well, look what ended up happening all the way up until 10:30. And then what ended up happening, basically the next hour is when it actually had made its direction. So it made basically almost a 50-point move right here in that hour after 10:30. It's after the European close. So European close is important, at least what I've noticed, or you call it lunch, is if you notice right here, so let's go back to, noticing that it's not wanting to go down. So you have to just get in at the extremes. So as this is pushing up, I want to short right here. If I'm wrong, okay, great, I'm out a little bit. You hold for the bigger picture. Down here, you want to be going long. Anything in between, you're going to get chopped up just like this. And there's some big moves you can have, but ideally I'm looking at the pivot. I want to get anywhere close or near this pivot, because as this goes down, you see this goes up, this crosses over, then it comes back down, consolidates, and then it drops. You can see basically within about 10-15 minutes. But if you notice these 30-minute candles, they're not closing above, right? Even this one, look, came back up, not closing. When this came back up, it consolidated above, and then it broke back down. That right there is when you get in, is when you see a consolidation above and then a break back below, you get in and then you hold for the bigger picture. Because look, you know that you're getting to the apex, right? So it has to make a move at some point. I told you, Scott, I told you I was waiting. I ended up getting in right here, and then I made this move right there. And which is not the ideal spot, but that comes with sizing. Like, the best spot for sizing is near a pivot, and waiting for certain setups of a failed breakout, right? So if I got in, say, with 2, 3, or 5 contracts right here, no sweat. I can risk to a back above this candle right here, right? This is maybe a 10-point move, but I don't want to be getting in, 3, 4, 5 contracts down here, because if this ends up, see this candle right here, that could have easily, if I move this like this, that could have easily been the reversal candle right here, where that could have reversed, which I've seen, and then come back up here and then come back down. So are you willing to give up 30 points, to possibly go back down? So consolidation moves are really tough to play, but if you can figure out, and the moment that you're in consolidation, then it sets you up for success also later on in the day. Because let's move on. So this is what ends up happening when this breaks down. You have to tell yourself, where can it go and what can it do? So if it breaks down, you know that it needs to go to the pivot, right? It needs to go to the pivot or as close as it can. And you can see that it just sort of was struggling right here. And then eventually, like right before, 5 minutes before 12 o'clock, it got really close, but it was still about 5 points away, you know? Now, granted, sometimes it doesn't necessarily go all the way, but you can't risk that, you know? So anyways, I ended up going long right here, risking down below here, and end up capturing this move. I end up selling, reversing my position. I didn't know what it was going to do, but it ended up doing what I was hoping it was going to do. It's because that previous day close right here, that was an important area that I was looking at. And really, see, that's why I was sort of, hovering right here. And when it broke above and then came back down, you see how it came back down right here? That's when it just started failing. So then it failed, and then this was a nice 30-point move. But this happened right between the 12 and 12:30. So again, when I talk about rules and like when you need to get in, there's flexibility, but you just need to be aware of where are you at in relative to the pivot. That's it. Are you close to a pivot and you're shorting it? Like down here, do I want to be shorting right here? Hell no. I don't want to be shorting down here. There's nothing good down here. So what I want to be doing is just waiting for opportunities to go long. And once you go long, they're going to make it look like something's about to do something, and then they end up doing the opposite. Just like this. This was a nasty candle, and I'm sure a lot of people were chasing, but this was a sweep. It basically came down, it crossed over the pivot by maybe 3 or 4 points, and then the next 5-minute candle opened up, and then look what ended up happening. This was 10 minutes before 12:30. So if you look down below here, it says 12:20. 5 minutes up. Then the last 5 minutes, they came down and came back up, and they closed up here. That is super bullish. Period. You defended this, and now you're back up. And then just like I mentioned to you, because I saw that at 12:30, if you were going to play afternoon, you at least know that they're defending this area, and you should be expecting, something potentially to the upside. And so you could have easily at 12 or 12:30 got in right here, and then put your stop, and then put your profit target here, and then possibly up here, and then walked away for the day. You either make money or you don't. You either lose 5 or 10 points, or you make 100 points. And that's sort of how you have to figure out, the afternoon. But so let's go back to technical analysis. So what you have to constantly be telling yourself is, once you see this, and remember that level right here, you broke back above, now they're defending it. They're defending this, plus they're defending this fib. So now you want to be using this as support. If this broke back down, then this just can get really nasty, as you end up chopping down here, and then there's no momentum. But the fact that you came back up and you held, now all the shorts are trapped. And so what they're slowly doing, and this was just a slow grind for about, you can see 30 minutes, hour and a half from here to here. This was a slow grind, and that wasn't fun. But this what ends up happening, as in if you notice the cone, if you end up breaking back above here, this is where a lot of stops are. And what's nice about it, it's also a pivot. So it comes up, comes back down, sweeps, and then right here, this new TPO, it was like 5 or 10 minutes into it, then they started gaining momentum. And the moment that it broke, you see how the candle closed? It was toast. The rest of the candle, basically 5, 10 minutes, you end up having almost a 50-point move. It was about a 40-point move. And where was it? It was right at the fib pivot right here, and the high of that close of those candles. So then it broke above, and then came back up. It broke over the bull pivot, then came back down. I mean, this is where it exhausted. Yes, there is a +1 ATR, but be honest with you, I want to be getting in long right here. This is where you should have got long, because this was a breakout. Anyways, that's how you play the rules. When I say rules, like 10:30, 30 minutes, it's those 30-minute candles that are important. Like, I saw this candle up right here, but I wasn't convinced, because what does that mean? Look, I had 5 minutes right here till the end of the close. So that 5 minutes, I wanted to see what it did. You could have waited that out, right? And if you waited until 9:30, where would 9:30 be? 9:30 would have been down here, right? And so if you would have saw this at 9:30, 9:30 is also a critical point. This right here would have told you, holy crap, we're going down. Like, we're going down eventually, because they should never have done this either, right? And so now this is you're telling the story. So consolidation, found support, it broke back above the consolidation breakdown, and so that would be a failed breakdown reversal. And then if you look at basically a 30-minute, that's breaking it down on a 5-minute. But if you look at it on a 30-minute chart, you see how it's just moving in between the pivots. I mean, the morning it dropped from the bull pivot down to this pivot. Then the afternoon, they scooped it up from here and brought it back up. At the end of the day, this is what you're looking at. This is your consolidation pattern. So ideally tomorrow, you either morning the first hour, you're going to consolidate right in here, right? And then they either are going to break it out, and then this would be your target. They'll basically end the week back where they started, or where they had all-time highs, or they're going to consolidate, and then they're going to break out of here. And then if they do, then where's an important level? Remember, it's that 860, 870 area. Basically, I would move this up. You want to move where these candles are closing. You see how it dipped down, came back below, broke back above, and you see how now the 865 is a critical area. You see how these candles were closing. So now if I come back over here, this is where I would say is a critical spot, which in essence, that probably what was today, a critical spot, because you can see how it held here, and you see that was the top right here, and then you see how it came down, came up, and then this is where it held, and this was the same thing right here. It dropped and then held right there. So really, it's that 865 that's going to be a really challenging spot. So that is going to be your oh shit, moment. We should not break below that. If we do, I wouldn't be surprised if we come back down to this area. But I don't know. I mean, who knows? It just all depends on how we open up. If we open up here, great. Then I'm going to be looking for shorts and filling in this gap. And this was if we break down below here, great. We may not fill the gap. We may end up, continuing pushing down. But if we end up breaking back into here, then now you need to be aware that you are where your support and resistance are. And you just gotta have patience. You just gotta wait until you get to those different areas. So anyways, that is how you play. I know that's a lot of information, but look, it really just comes down to strip everything away and just play off these pivots. And look, if you're wrong, like look right here. I went short here. What did it do? Stop me out. Okay, well then you wait. You see what it does. And then look, you get back in, but you need to have a thesis. So yesterday, I'll just go into that real quick, make this a dual video, is you see how really minus the big drop in the afternoon, this played perfectly into the pivots. And this was supposed to be per se a box day. So you see how we opened up right here and then came up. So this is your 50-point move. When you came back up, you see how the 5-minute candle closed and we came up. Well, you don't want to chase this. At this point, now you have this move up right here. So you're looking for some kind of retracement. When it retraced, came right back down to the bottom of that candle, that's where you want to get in and then risk right here, right? Now, if you were to drop back below here, then that would be a failed breakout, just like right here in a way. And then you would possibly have then a reversal. So you would come up and then you would reverse, and then you would possibly just come down the rest of the afternoon. But because this held, I mean, you're just gonna have to take a risk. You just have to take a risk, as in you have to get in and go long. Like I've learned that you can't wait to see what it's gonna do. Like you can't wait to see, oh, is it gonna break down to where then I can go in? No, you just have to get in right here. And if you get out, if you get stopped out, that's 100, 200 bucks. Oh well, right? But if you're right, look what it ends up happening, and you hold, not just be right, but you need to hold. This would have been another 50-point move. And you need a hold for the bigger picture. Like, don't get caught up with seeing these candles go up and down, up and down, up and down, up and down. No, you have to just commit for the morning. Say, hey, I'm gonna get in here and I'm gonna sell right here, or sell as close as you can, right? And then you can reverse, and that's what it ended up doing. I ended up reversing and catching the move all the way back down. I wasn't targeting here, I was targeting VWAP, because the majority of the move was made, and look what time it is. This right here, miraculously, is 10:30. So you need to just be looking at charts and looking at time. 9:30, boom. What do? You reverse. Okay, what happens? 10:30. Here's 10:30 right here. Where are we? We're above the pivot. What do? You go long, right? Don't try to be exact. I got in long right here, and I risked right here. That right there is a 30 down to 20, 10 points. Boom. 10-point risk to a possibly, my target would be back up here, which would be 64. So that's a 30-point. So 10-point risk for a 30-point gain, and you just have to hold. Because what it ended up doing, chop, 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 chop. They dropped it. Look, they came all the way down the pivot, but they never busted through. And they scooped it back up, and they came and they tagged right here, right at the top of these closing candles. That's why I like the 5-minute. It shows me where they're closing it. It shows me these wicks. So then it gives me a reference to where, look at the afternoon, where was the high? They ran it up basically the last 30 minutes from down here all the way up to 65. So this was a 40-point move right here, all in about 30 minutes, right? But this right here would have chopped you up and mentally screwed you with your head. So that's why you want to either have, every day you're only going to have a few opportunities to have a perfect entry, right? But that's all you need, and then you hold. So then right here you have the afternoon. That was the high. And then what did it do? It was showing a consolidation pattern. It ended up breaking, retesting, and then it dropped all the way down, came back up, and then I think this was an important area right here. Oh yeah, if you look right here, that looks like there was a fib. So right here you can mark it, and there you go. Whoa! It used that as a reference. Came back up. You could have gone long here, set your stops. If you got stopped out, great, then to switch. But you at least want to be losing money. You get in when it goes up in your favor, you take you move your stop. But the moment it comes back down, it should never have done this. It shouldn't have, because look, this is now was support, now turned into resistance. So this merely bouncing off and coming back down, this is when you go short right here. You just don't. I mean, look at all this right here. There's nothing in your way. This is like a no-brainer short. That because it's not like it's all this chop right here to where it may take a while to get down. No, if this ends up breaking down, then this is a double top. You see how it's one up, down, two up, break, and that's when then you just waterfalled. Then when this came down, you see how the 5-minute candle right here. It ended up closing. The next candle, they shot it up. See this wick right here? But then they could not close it, and they came back down. So you could have gone short right here, got stopped out, But then when it came back down, then that would have been a failed breakout reversal or just continuation. And at this point, now my target would be down here. If this breaks, and this was the low of the day, you better believe it. I'm gonna get in right here, and I'm gonna hold to at least right here. Now that's pretty much the move. Like, I would not have expected this right here, but that happens sometimes where you basically have a full ATR move, and I guess in reality this was a ATR and a half. When I say full ATR, I guess a full ATR is when it comes from the previous day close down to this pivot. But for me, I look at it like a lot of moves I see where they shoot up to the bull and then they drop, or they shoot down to the bear and then they shoot up to the bull. It just sort of gives it like a slingshot effect, to come down, fake people out, and then it shoots up. So, but it's super hard to have this to play the full move. That's why you don't worry about playing the full move. Worry about just playing in between these pivots, and then wait, see what happens around it, and then get back in if it ends up getting you out. So anyways, that's a lot to cover in this video, but that is why it's super important, and knowing where support and resistance are. Like, see how this right here was important? It wasn't just because of this. I actually had this line because of, look back at the beginning of the week. Remember, this is all weekly. Monday, Tuesday, Wednesday. Look what it did right here on Monday. That line at 865, it came up, shot down, and that was support. Boom, market. It's a pure technical analysis. I actually had another level right here marked. Right now, granted, it didn't do anything. Like yesterday, I think. Let's go back to yesterday. I believe it was this level right here. Yeah, it actually tagged it, and then it just kept on going. So it really wasn't that much support that like I was thinking, but it just sliced through. I think just people just didn't know what was going on. But you always want to see where these pullbacks are in previous days, because these pullbacks are where buyers are stepping in, right? And same thing, and this was resistance, because look, it shot down, came up, and then the week before, then they dropped it right there. So that's an area of concern. Use that for. Usually you can use those levels about a week in advance or throughout that week, right? Anything more than that, I get rid of them because they're not really as informative. I rather use ATR because ATR proves what's going on. Like right here, you didn't have to have anything, and you would have been able to play this fine. So anyways, good luck the rest of the week. Remember, I already gave a plan, but hopefully this helped. So when I say rules again, I'll reiterate. Rules basically mean you get in that pivot and you watch your time. That's it. You're using a 5-minute chart with 30-minute overlay candles. That's it. You need to be cognizant of your multi-day pivots, because you can see on volatility they do work, but also be playing with the intraday pivot. And man, it's golden when they both align, because that's why that was so strong. If I draw this line right here, this was the previous week's close. Look how crazy that was when this was the what was this? This was the bull pivot. Look at that. I mean, beautiful. I think of that as like a double whammy. It's a double support. So if that would have breached and then held, then this would have been nasty. We probably would have kept on going, especially in the afternoon. This would have just been trending downward. But the fact that it held, now there's a lot of opportunity to the upside. So again, if you're only playing the mornings, mornings are just as easy as the afternoons. You just have to compartmentalize. That's the reason why I had this 12 o'clock the divider. You see the reason why it's divided? It breaks up your day. And so if you don't want to play the afternoon, be done by noon. Like be done. Look, you would have had the full move right here. And if you wouldn't have sold that last 5 minutes before, then your face would have got ripped off. And they ripped this about 50 points. So don't mess with pivots. Don't mess around. So all right, that's it.